Tesla stock is down 6% at the time of making this video because the company missed Q4 delivery estimates. Now, while deliveries did miss, energy deployed did a beat, and the impact of a beat on energy deployed is more positive than the negative impact that this small delivery miss is going to have on Q4 earnings. We're going to discuss that in this video. Now, am I shocked that Tesla missed deliveries? No. My assumptions in my last Tesla video were correct. I just didn't find enough sales that would justify over 506 or even close to 514,000 vehicles for Q4. Some were saying my numbers were way off, pessimistic. I think I was being realistic, and I am proven quite correct. Remember, Tesla is my number one position, but it's always important to be realistic, especially after the stock has run up. Well, last year the stock has gone up close to 55%. Now it's true that in the last couple of days, stock is down around 18% or so, which is also why we've seen a lot of analyst upgrades. Let's see if the analysts will change their minds before the earnings or after the earnings. So let's discuss the negative and the positive impacts of the production and delivery numbers. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So, in the fourth quarter, Tesla produced approximately 459,000 vehicles, delivered over 495,000 vehicles, and deployed 11 gigawatt-hour of energy storage product, a record for both deliveries and deployments. Now, what we can already see here is that they delivered 36,000 approximately more vehicles than what they produced. This is very important because, one, this means inventories are coming down quite rapidly, probably in anticipation of, well, the launch of new models, Model Y refresh, more affordable models, next-gen vehicles, right? This is definitely one of the reasons, in my opinion. Plus, with regards to production is cash outflow, deliveries, cash flow, right? Cash inflow, because you're selling. Here, you are selling more vehicles than what you produce, which means the cost will come down, right? You produced less vehicles than what you delivered, which is going to be quite helpful in next quarter when we're going to look at free cash flow. Now, for those of you that are members of the channel, you already seen this sheet, hopefully. If you're not a member of the channel, then you get to see this sheet every single week in the Tesla weekly video. So in China, excluding the last 2-3 days of Q4, the number came in at 195,900. The estimated number, the end number that I've seen from Tesla and a couple of others, came in at 200,905, which means that for 2024, overall, Tesla weekly insured number came in at 656,287. Now, if we focus just on this right here, so I had USA come in at 160,000, which was my assumption. I was wrong by 3,192, which is quite okay. For the EU, I was a bit higher. I was at 86,000. It came in a little bit lower. And then the reason why I had around 70,000 back in the old video, the missing sales basically was, I forgot that Canada is not USA. I was thinking about North America, but Canada here came in at 13,256. Then you've got some rest of the world as well, 33,303. So the number came in at 495,570. And with the production number being lower, we see the difference here is 36,125. Now, if we go back to last quarter, we can see that the cost of goods sold per vehicle was around 35,100. So if we multiply 35,100 by 36,125, the difference between production and sales, we get this positive cash impact of $1.26 billion, which is quite good. Now, on the negative side of things, we can of course see that the difference between the number and the expected number from the analyst, 506,763, this miss is worth $470 million. How do we calculate that? Very, very simple. The missing numbers, right, between the actual number and what the analysts were expecting, times the automotive ASP from last quarter. Of course, these are last quarter's numbers. This can change for Q4, but those are the numbers that we know. So this is basically the impact, $470 million. We can also do the same for automotive revenue, right? We know auto ASP from last quarter, we know the amount of sales, you multiply both of them, and we get an increase quarter over quarter in automotive sales, $20.8 billion, which is going to be lower year over year. So an approximate number. As for the other red cell here, that's basically missing to be at the same level of 2023. To be at the same level of 2023, the delivery number should have been 514,925. We came in 19,355 lower. Now, the problem and the reason why the stock is down 6% is not because the impact here is $470 million. Because we also know that last quarter margins were what? 16% or so. Margins are probably going to be a bit lower. That's what management told us last earnings call. It's going to be a bit lower. So margin-wise, we're not really going to get that big of an impact. It's a small miss, big deal. But energy side of things, energy had margins of what? Close to 30%, right? So the difference between the 9.4, 9.5 gigawatt hours to the 11 that we got right now, 30% margins on that, on the difference, which I think is going to be $1 billion or so, close to it, is much bigger than this small impact that we are getting here because of the miss on deliveries. So why is the stock down, right? Why is the stock down 6% if they can just calculate that? It's pretty simple. Well, in my opinion, it's because one, Wall Street still views Tesla as a car company since the majority of their revenue comes from selling cars. Second of all, maybe there is a demand issue, right? Maybe there is a demand issue. Then if there is a demand issue, knowing that there is a Model Y refresh, knowing that there are new models coming out in 2025, if there is a demand issue, that might not help the cause, which I think is a flawed way to look at it because, I mean, clearly they did sell more vehicles than what they produced. So maybe demand is not really the issue. Plus, if they do launch more affordable models and a Model Y refresh, maybe that can reignite demand. That's probably what we expect. And then the last one, and that's, I think, that's probably what's the reason why I will go with that, is that management told us that they could beat last year's number, right? Last year's result. So they told us guidance, which they didn't meet, not close, let's be honest, 19,000 difference. So maybe that's the issue. The issue is that the company provided guidance, but then again, Elon provides a lot of stuff that's never really that accurate. It's either late or just completely misses. So maybe that's the issue. Because remember, he also told us that next year he expects volume to increase 20 to 30%. So can we trust him on that number since he completely missed on the Q4 number? So that's, I think, how Wall Street is thinking about it right now. Maybe they will wait for the earnings report and definitely the earnings call to actually make up their mind. But all in all, the delivery miss, I mean, I expected the stock to react negatively because I think by now we already know how Wall Street is playing this game. But yeah, the big beat on energy deployed definitely outweighs the miss in deliveries. Financially, it makes it look even better if you just do these calculations here. So yeah, delivered way more than what they produced. It's going to help them with free cash flow. So yeah, it's not that bad. It's just, yeah, they gave us guidance. They couldn't meet it. I think that's the issue here. At least that's my issue here. But all in all, 2025 is definitely an exciting year because of the launch of new models, refresh Model Y, energy growing at a rapid pace, and the more that they grow, the energy side of things, the bigger the chunk of the overall revenue is going to be, and of course, the bigger the profits will be as well, which means, well, better margins, obviously. I did also see that Cybertruck was not as good as last quarter, sales in the United States and actually overall, because now we also had Canada to that. So, I have some questions about Cybertruck because we've seen what pre-orders close to 2 million. Even if half of those got cancelled, that's still 1 million vehicles, right? And they barely delivered what? 12,000 or something like that, maybe a little bit more, maybe a little bit less. I mean, you would have thought that quarter after quarter that number would grow more and more. So I have some questions about that. Probably we're going to get quite a lot of, hopefully we're going to get quite a lot of answers in the earnings call. But all in all, an overreaction, maybe an overreaction because of the headlines, but don't forget that the stock did run up quite a lot in the last couple of weeks. I mean, a lot of it is priced in. Yes, it's not the cheapest stock out there. It's actually an expensive stock. So yeah, you have to know how Wall Street thinks about things. So I'm not really surprised to see the stock down 6%. I'm more surprised seeing a stock like SoFi being down 9% because KBW said something about the stock, blah, 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 something that they've been wrong about for a long period of time. But okay, it's Wall Street. They play the short-term game. We play the long-term game. So overall, I hope this explains it. If you have anything to say, let me know down in the comment section below. Hit all the buttons and I'll see you all in the next one. Bye-bye.